Take a look at the crude oil prices, which have continued to be very volatile. And today we get you an exclusive voice from Canada, which, of course, is looking to increase production. Canada also has cut output by 9% from its province, Alberta. We are now joined by Khosla, who is Deputy Minister, Energy Sector of Canada. Mr. Khosla, hi, thank you so much for joining us. Well, starting with the crude oil prices, first of all, it has been very volatile. But when it comes to Canada, the prices have been at a huge discount to the U.S. crude prices. At one point in time in 2018, we saw the prices at a huge discount of $50 per barrel as well. Right now, of course, it stands somewhere between 10 to 15. But what is your sense, apart from the price volatility, how do you look at this discount and premium?
We have consistently, since the inception of time, as we've been measuring Western Canada Select, which is a specific grade of oil, have taken a discount on our product of about $10 to $15 on average. And that's been, in some ways, accepted as a market condition. It doesn't sit well with Canadians, I will tell you that. But the reason behind that is a basic concept that it's called egress. We do not have solid market access in this country for our products, but for one customer. And that customer is the United States of America. And they actually take 99% of our crude oil supply. I'm pretty proud to say that we supply approximately 20% of the crude oil consumed in the United States of America, which provides for energy security in that country. But by the same token, we take a discount of that $10 to $15. What happened in 2019 is something that's only happened maybe 2 or 3 other times in the history of the file, which is that spread, that discount went from an average of around 10 to 15 to close to $50. And the province, as a result, had some major economic issues that it was facing, because obviously, as commodity prices go, so do the balance sheets of government and other such things. And when it hit $50, it really, the main reason for that is the lack of capacity for offtake. So we're now hitting a point in Canada where the production is exceeding our capacity to move the supply out.
Well, that clearly has been the scenario, especially when it comes to not just Canada, but US and Brazil as well. These are the 3 non-OPEC producers which clearly are increasing their supplies. But Mr. Khosla, what is the kind of conversation that you are doing within India when it comes to oil and gas trade? Because we've heard statements from US. US already has started exporting a lot of crude to Asian countries. Where does Canada stand in that picture?
What we'd like to see is Indian companies playing a much more active role within our oil sands. Like we need, somebody estimates here within the department that we need about $500 billion of capital investment of CapEx to come into the system in order to materialize these reserves. And we feel like, we're getting investment attraction from the U.S., from China, but less so from India. And I would just like to make that point to your audience that we would be happy to work with any Indian companies that want to move into this space. We've been talking to Reliance heavily over the years. We've been talking to Tata. Indian Oil Corporation was here on the ground. Even on the gas side, ONGC has been here, GAIL. But it just feels like we could do a lot more in that space.
Mr. Khosla, so as a customer, how is Asia looking to you? Because you are looking at high production, etc. You did say that you are looking at various countries within Asia as a customer, as an investor as well. What has been your sense when it comes to especially India?
3 or 4 big Asian markets that we're working with and through. Korea, Japan, India, China, Malaysia. And I could keep going. But the main point is that, Canada has only a certain amount of reserves, whether it be on oil and gas. And the world needs a lot more than what Canada can supply. And Canada is wanting to supply the rest of the world because it's pivoting away from the U.S. market. Turns out our biggest customer is now also our biggest competitor. And our issue really is about infrastructure, right? At the end of the day, we're working hard on that. I'm very proud of that we were able to achieve final investment decision on a gas project, a liquefied natural gas project that Shell Canada oversaw. It's called LNG Canada, and it's stated to be in service in about 2022. Our government, the British Columbia government, which is a subnational government that's involved, works super hard with that corporation. But you may or may not know that underneath that project, which is the single biggest investment in Canada's history, $40 billion into a gas plant, there are 4 countries that are involved as minority partners: China, Japan, Korea, and Malaysia. And so investors are waking up, and we want India to be part of that. And as I said, we can materialize a lot of stuff in Canada, but it will never come close to supplying the world's needs. I see today there's an article in the Times of India that says that India is about to surpass China to become the 2nd largest oil demand center in 2019. We are super mindful of that. 2 things really need to happen for us to get the oil to market. I don't know if you know, but in the state of Gujarat, our bitumen has been shipped over there. It has been tested, I believe, in the Reliance refineries. It seems like it's a good fit, much like it is in the Gulf Coast of the United States. The Gulf Coast wants our heavy oil. India, China wants it. And so we've made moves in that direction, but we really need more investment into our oil framework here from India.
Point well taken. Mr. Khosla, one final question. So what is your sense on the global crude oil demand, supply, and most importantly, prices? What prices do you think works for Canada as the cost of production stands right now?
One is, for my department, and what we noticed is that it used to be little shocks were exactly that. Little things would happen in the North American system or in the global system, and they would just be blips on the radar screen. But now with the excess supply and excess capacity that the world seems to have, which is, we knew it was coming, those little things actually seem to be having much bigger impacts. So I talked to you earlier about refinery outages in the United States. I don't think we could have predicted that a few refinery outages would have meant that Canadian oil would be almost selling at a non-profit margin point, right? And so it's important to watch all of these little things in the system. That's when we started to become keen watchers of any shocks in the system. Anytime OPEC makes noise, it actually causes us to really look at things. So the second thing I would say is that we do an array of forecasts here. We're not into saying this is the right answer. We're more at looking at what a law of averages could look like. We have a number of good forecasters who work with us both domestically and internationally. You talked about Baker Hughes. We certainly watch them. There's I could go through a whole list of analyses that we sort of examine. And I really like where the world's going. I think that, if we can maintain this $50 to $60 per barrel kind of concept, that's really the zone that we're probably going to be in.
Well, that really sounds like a good number then. $50 to $60 is something that the world really seems to be talking about as a fair price, even higher from there. And I'm assuming that Canada would also see some sense from that. Thank you, Mr. Khosla. Really appreciate you talking exclusive to CNBC TV 18.